Fifth year, 2 lakh plus 28 here, interest 2 lakh 28,000. So this is your cash flow. Interest plus cash outflows are there. Cash inflow, net cash outflows, how much you rental you are paying installment. So cash outflow minus cash inflow, net cash inflow multiplied by discount. Net cash flow is 2,53,000 multiplied by 0.870. It works out 2,20,110. Hello my dear students, I am Dr. B.S. Subramanya, called by name Dr. BSS, Professor in Commerce and Management, Vidhyaashram First Aid College, a Temple of Excellence, MYSURU. In this session, I am going to have Advanced Financial Accounting, second semester, Unit 5, Session 2, in favor of leasing. I told in the last session, in leasing, there are two parties. One is the lessor and is the lessee. The agreement that takes place between the lessor and the lessee we call as leasing. Lessor is the owner, lessee the utilizer of that patent right. So there is an agreement between these two parties. That agreement we call as leasing. We'll move on to problem now. XYZ builders need to acquire the use of a crane for their construction business and consider buying or leasing a crane. The crane cost rupees 10 lakh and is subject to the written down value method of depreciation. So there are two types of depreciation. One is called straight line method and is called diminishing balance method or written down value method. 1 lakh depreciation at 15%. The lease rental is 3,50,000 per year for how many years? 5 years. XYZ builders can raise a debt of 14% payable in 5 installments along with interest at the end of the year. The company is in 30% tax bracket and discounts the cash flows at 15%. First year, 0.870, 0.756, 0.658, 0.572, 0.497. Either we go for buying or we can go for leasing. We have to advise to the public now. Now, what are the first steps to do? First, we have to do the depreciation under diminishing balance method. What is the cost of the asset? 10 lakh, 15%, 1,50,000. Deduct this, will become 8,50,000 and 8,50,000, 15% is 1,27,500. Balance is 7,22,500. On 7,22,500, 15% is 108,375. It becomes 6,14,125. On 6,14,125, 15% is 92,119. Balance is 5,22,006. On 5,22,006, 15% is 78,301. Balance is 4,43,705. This is the depreciation values here. The balancing value. So, which method you are following? Diminishing balance method. Then, this is the first step to follow. Second, calculation of cash outflows. For repayment, 10 lakh is there. Your interest is 14%. Then every year we are paying how much money? 2 lakh. So 2 lakh does not contain any interest. 2 lakh plus 1 lakh 40, it becomes 3,40,000. For this will be deducted. Balance is 8 lakh. 14%, 1,12,000 plus 2 lakh is 3,12,000. Third year, 6 lakh, 84,000 plus 2 lakh, 2,84,000. 4 lakh 56, 2,56,000. Fifth year, 2 lakh plus 28 here. Interest 2,28,000. So this is your cash flow. Interest plus cash outflows are there. Then you have to calculate cash inflow. You have to go with the cash inflow. Yeah, you have to add the depreciation plus interest total on this tax saving. You have got 1,50,000, 1,40,000. It becomes 2,90,000. 30% cash saving is 87,000. Then second year, 1,27,000 plus 12,000. 2,39,500. 30% is 71,850. 1,08,000. 375, 84,000, 1,92,375, 30% is 57,712, 92,119, 56,000, 1,48,119. 30% is 44,436. 78 301, 28,106 301. 30% is 31,890. So it is a cash inflows. Now you have to calculate net cash outflow. So cash outflows minus cash inflow is net cash flow multiplied by discount factor. See, present value cash outflow under purchase option. Your cash outflow is 3,40,000, cash inflow is 87,000. If we deduct, net cash flow is 2,53,000 multiplied by 0.870, it works out 2,20,110. Second year, 3,12,000 minus 71,850 is equal to 2,40,150 multiplied by 0.756 is equal to 1,81,553. 2,84,000 minus 57,112 is equal to 2,26,288 multiplied by 0.658. It comes to 1,48,898. Then 2,56,000 minus 44,436 is equal to 2,11,564 multiplied by 0.572. It works out 1,21,015. Last year, 2,28,000 minus inflow is 31,880. Net cash flow is 1,96,110 multiplied by 0.497. It works out 7,69,043. This is the purchase option. Then go with the leasing option. Every year the rental value is 3,50,000. 30% cash inflow save 1,05,000. On this, net cash outflow is 2,45,000 multiplied by discount. Every year this remain constant. This remain constant. Minus of this 2,45,000. This remain constant multiplied by your discount factor. So it works out 8,21,485. Now we have to conclude which option is better. Here is 8,21,485. There 7,69,043. So decisions, since PV of outflow is lower in the purchase option, XYZ builder should avail of the loan and purchase the crane. So better to go on the purchase, not on the lease. Easy method, easy method. First you have to calculate the depreciation, then you have to calculate the interest, cash inflow, net cash outflows, how much your rental you are paying installment. So cash outflow minus cash inflow, net cash inflow multiplied by discount. Very easy method. So which are the follow? First we have to calculate the depreciation. After depreciation, we go with the cash outflow, loan amount, interest, you have to cash outflow. Then you have to calculate the cash inflow. First one, depreciation. Second is cash outflow. Third is cash inflows. Then net cash outflows you have to calculate. Then this is net cash outflow. Then value cash flow under leasing option. Under leasing option. Then whichever is less, that is the better. Since according to this problem, purchase option is less than the lease option, better go with the purchase of crane. Hope you understand. Very easy problem, very easy problem. Method you have to follow. Okay. Hope we'll meet in the next session with another problem. Till then, goodbye. Meet in the next session.